Hello, my name is Aaron Edwards, co-founder and market consultant of Santos Springs. We offer grain marketing solutions to producers in multiple countries. Welcome to our W2H grain marketing channel. Go ahead and hit the subscribe button. I also recommend tapping the bell so you get future notifications. And if you like what you see, hit the like and share this video with other farmers who care deeply about their grain marketing. If you are a corn or soybean farmer, your revenue depends not only on your production, but also the answer to three simple questions: when, how much, and how you sell. One W, when, two H's, how and how much. Our W2H mentorship provides a clear, concise, and custom approach to answering each one of these three questions for your specific farm throughout the year. Before we start this week's content, it's always important to remember that trading in futures products entails significant risk of loss, which must be understood prior to trading and may not be appropriate for all investors. This commentary and the information contained within should be considered market commentary and reflect the opinions of the author. For those of you watching this with a delay, if you are a U.S. corn or soybean farmer and want to stop being held hostage by market uncertainty, let us teach you how to place each one of your bushels in a grain marketing strategy specifically designed to optimize your farm's revenue. Click on the link and we'll work together to see if our W2H mentorship is the right next step for your grain marketing. Good morning. It's March 4th, 2025. My name is Aaron Edwards, co-founder and senior market analyst for Santos Springs. A lot to cover in these markets, and we're always going to start with the action plan. Our bias is always towards action, so we're going to get the action plan out in front, and then we'll go over some headlines and just some information, and then we'll go over the market analysis and summarize it all, and then wrap it up with answering some questions. So a lot to go over this morning. I want to jump right into it. First thing, as we always do, recommendations for this week. If you're busy and don't have time to watch the video or have a lot going on, for this week, no action recommended. Assuming you've been following the recommendations, no action recommended. Get that out in front. Now, that does not mean that this is not an important week. Okay, there is a lot going on in the market. So I actually would encourage you, if you're really busy, that's okay. But I would encourage you to watch this week's video, just because even though we're not recommending action, there is absolutely a lot going on. And let's start just with some major headlines. So end of last week, we had the USDA outlook. Big takeaway: expansion to acres in general for grain, a 4% increase expected to U.S. corn acres. So that's bearish, not super surprising, but it was bearish. We were already seeing the corn market sell off coming into that report. And then the, sorry, did I say decrease? It's an increase to corn acreage, a decrease not quite in the same proportion, but a slight decrease of just shy of 4% to soybean acres. Even though soybean acres got a friendly outlook number, they're still really struggling to get up off the mat. I mean, they're still pressured down. As corn has fallen, soybeans have also fallen. That ratio is slightly coming back together. If you look at new crop beans divided by new crop corn, that's slightly coming back together. But it's still, I mean, it's still heavy for beans, very heavy for corn. The other big headline was the tariffs went into effect overnight. Basically, you know, I'm recording this on March 4th, and that was it's Tariff Tuesday, right? Today is Tuesday. This is Tariff Tuesday. They went into effect. What we know now, we don't know how long it'll last. We don't know the details of this. And I just want to make it very clear. Any comments that I make about tariffs or about trade wars, it's not my role to give you political commentary or opinion. So don't interpret anything I'm saying as a political commentary. Our job is to manage grain markets, and obviously politics and what's going on geopolitically impacts that. So I have my political opinions. When it comes to what we do here, my focus is just to be pragmatic, right? Just as a pragmatist. So we don't need to be throwing tomatoes or getting upset about the political situation. My comments here are not intended to have any type of political leaning. It's just simply living in the world that we live in as a pragmatist, right? So that's what we focus on here. So what we know right now, they went into effect. China is talking about retaliatory tariffs. The one I want to point out is a 15% retaliatory tariff on U.S. corn. Mexico is also a really big market for U.S. corn. I've been watching a lot of news, as I'm sure you have as well, and we need to. Last I heard, there was no retaliatory tariff from Mexico on corn, or I don't think anything really. So far, we have the tariffs from the U.S. China is saying we're going to dock you at 15% on corn exports. We haven't had that same news from Mexico. It's a fluid situation. It's something we're going to watch closely, but keep that number in the back of your head as the 15%, because there's an interesting commentary that I want to get to when we get over that. For a couple weeks still, I'm probably still going to be showing the crop progress images out of Brazil, but this is the CONAB number, similar to the U.S. Every Monday they put out a crop progress number. So let me get this shared up here. But we're almost out of the. Then we'll go over some corn development numbers out of South America. But we're coming to the home stretch here. March is kind of the passing the baton where their weather risk in South America almost goes away. We still have corn weather risk in double crop corn country in Brazil. But before long, the focus is going to be on U.S. crop development. But we still got at least a couple more weeks. So the big news, let me get a pencil up here or a marker. Maybe we'll do a green here. There we go. The big news, this is, again, the numbers from CONAB. That's the Brazilian agency. Get the markers off to the side. There we go. So the name of the agency, this is similar to the USDA. It's CONAB. I'll just write that across the top real quick. And the big takeaway, we won't go state by state, but last year they were at 73% of double crop corn planting. This year they're at 69. 4%. They're basically on pace. And what I would say is a lot of regions look at either the end of February or like March 10th as the cutoff. If you want to think of double crop corn, a proxy for how it would be in the U.S. is maybe think of like February as May and March as June. So it's just for a number. A lot of people can get away with planting in early June and still be just fine from a yield standpoint. You get into the middle of June, you start having some concerns. It's kind of similar if you look at Brazil's double crop corn. So you could get away with planting in early March and still be fine. The way I'm looking at this data is if double crop corn went in late, it is some number under 30% of the crop, because we don't know how much will be planted this week. If they go plant 20%, then maybe 10% is planted outside the window. So it's not a huge factor. And then when it comes to, we go back here, when it comes to soybeans, Brazil actually got ahead. These numbers are also from CONAB, and just comparing here, that last year they were at 47.3%, 48.4%. They're ahead of last year's pace. Last year's pace was strong, and ballpark soybean harvest is halfway done. What I would say that's interesting is as you look at Brazil's soybeans, they usually get just this tremendous wave of all the bins are full. There's bad roads, and the basis plummets, and they've got beans running out their ears. That headline is probably about 3 weeks delayed. So they've got caught up on soybean harvest. They're at halfway. This back half of soybean harvest, this is where you start seeing those the long truck lines. They can't get the beans out. Basis is there. There's going to be beans, like I said, they got beans running out their ears. That's this back half. This is what we're coming into now on the soybean harvest. And then, okay, let's go here with the pyramid. If you're familiar with what we do, we always talk about this. Starts with the market plan portfolio. If you're watching this in real time, we have worked together to build your portfolio, and this is what makes sure that the recommendations are matched to your needs and to your operation. We really want the magic happens when you take market opportunities and match them to the needs of your farm. That's really where the magic happens. And so building this portfolio, that is the base of everything we do, and that is customized to your operation. Then the middle level, that's the green level, that's what we're going to jump into here shortly. That's seasonals, funds, technicals. That's the part where we talk about the market, go over, focus on the market, right? And then finally, the action plan is where you put it all together. Okay, this is what my farm needs based on my portfolio. This is the recommendation that makes sense because of the analysis. Let's get our work done. For this week in particular, no call to action recommended. So we are going to go soybeans first. We're going to go through the soybean analysis, then we're going to go corn. And let me get the soybeans pulled up here. Give me just a second. Okay, great. So this is the managed money, speculative, the positions by managed money in Chicago. And let me get a marker up here. I think yellow will work well. This is their position over the last 12 months, the Commitment of Traders report, and put out by the CFTC. And here we go. This is the net position. So just first to go over it again, if this is at zero, I circled that zero there. If it's below zero, it's as if the price of soybeans were artificially low because speculators are pushing it down. And if it's above zero, it's as if the price were artificially high because speculators are buying it. Another way to think about it is if we're in the green, if it's positive, that means speculators think it will go higher. Kind of the trend is your friend. And if it's below zero, their wager is that it will go down. So that's just a bit of a summary. We spent a large part of last year down here in very negative territory, and it was saying, they thought beans would go lower, and they've got to go lower, and it was their oversold position was big enough to justify actually, buying soybeans to kind of place a wager against them. But then we saw in January this point of inversion. Let me clear that out. And then this point of inversion here. And what's been a little bit disheartening is over the last several weeks, last week they reduced their position based on the previous week and before that. And then they maxed out about 4 weeks ago or 5 weeks ago. They maxed out their long position. After the heavy trade that we've seen this week, I'm guessing that number will either be close to zero or they'll actually go back to a net sold position. But that's the number we'll get Friday, right? We don't know that yet. But it's important to realize that spec funds are stepping back from their long position. They're saying, maybe I don't want to own soybeans. And on that note, if we look at the trade, it'll make that much more sense, right? If they're saying, maybe I don't want to own soybeans, well, what's happened to the price of soybeans? This is the July contract. Let me get a black marker up here. Get the marker. Where's the black? Black. This is July. There we go. Underline July. We failed here at the 200 day, right? I was hoping, if you remember, I was hoping this would we would see in the bean market what we had seen in the corn market, which was a golden cross, which they'll go up that way and we would get that move. That's what I was hoping for. Did not happen. We failed at the 200-day, and that is not good news. Now we're looking for a value area to the downside. Maybe this is it. Maybe we're already there. But honestly, technically speaking, these lows is kind of what we would have to trade back to test that, to get kind of a double bottom, right? So if we want to be real optimistic, maybe we say, hey, we are in a value area. We're already there. This market's going to turn around. And I considered going ahead and stepping into more re-ownership of beans here, thinking of our Q4 beans that we started re-owning, but we want to step into. I considered making that recommendation. And I decided, we don't want to catch a falling knife. We don't want to make our position heavier on the way down. So we're going to wait. If this market turns around, we might be a tiny bit late. If we get down here to this other area, these other lows where we were, it'll be a little easier to re-own those Q4 bushels if we're testing that support. I would like to make a note, and I'll do this on the November contract, because it's a little bit more clear here. Let me move this over to the November contract. And let me get the black marker up here. Here we go, black marker. I want to just point out, just for the sake of kind of a mental note, whenever we have gotten too much under $10, so $10, I can draw that a little better. $10 is going to be like right in here, right? Whenever we've gotten too much under $10, generally speaking, on the new crop, generally speaking, markets have been uncomfortable. We kind of run out of selling pressure. Buyers say, hey, corn under $10, that's something I can be interested in. And I would even say closer to $10. So the big question is, will we take out the lows? Is this market absolutely done with? Are we, is this market going to just absolutely plummet? Or are we either at or entering a value area where this soybean market will rebound from? And this is where, if we think about the funds and if we think about seasonality, just put yourself in a speculator's position. You bought close to, as a speculator, hypothetically speaking, but we're looking at the net position of the funds, right? You bought close to $10 last time and it rallied up, not quite $1, but almost $1. That worked. And this time around, you are coming into the US spring with a forecast that there is going to be reduced acreage in the US. And you already know South America has a monster crop, but the USDA has slightly reduced Paraguay and Argentina. So the crop in South America, it isn't getting any bigger. Maybe it's getting a little smaller. In the US, acreage is going down on beans. And last time, as a speculator, hypothetically speaking, if we just look at their position, right, when they were net sold and then they got net long, last time you did this, you made money. So why would you not do it again? So my bias is this is, in the soybean market, we are looking at a seasonal buy. And it's not just, well, Aaron has a harebrained idea. No, if you look seasonally speaking, a lot of times, late February, early March, we get this seasonal dip, and then we rally into the spring. That is a very normal market trade. To the extent that I'm almost willing to just step in front of this and say, hey, let's buy it this week. Let's extend our long position. But we don't know, what if this market falls another 40 cents in the next week? What if it falls another 30 cents? We already established some re-ownership. We're looking for a place to come in and bring down our averages. Well, we don't want to catch a falling knife or catch a falling sword, right? Let's just let the market trade. It's very hard to get those tips of the market, and let's let the market trade one more week. but be ready. Very likely next week we're going to be stepping in. I'm going to be recommending stepping into some of that quarter four reownership. And depending on what's going on in beans, I mean, very likely we're going to get some work done on the long side of soybeans coming up. So let me shut down the beans and pull up the corn here. And give me just a second. All right, getting the corn image shared. The same basic concept, same basic image. Colors are a little different as the soybeans, but this is the position of the speculators in Chicago over the last 12 months. Let me pull this to the bottom. When they're at zero, they're neither bought nor sold. In November, on average, right, there's several bought positions, several sold positions, they even out. On November, we saw kind of that switch from net sold to net long. And then I've done this every week for probably 3 months. They kind of stair-stepped up and then they really came up. And then now it's kind of zigzagging. What's going to happen? Well, as hard as corn trade this last week, I'm almost sure that we saw a reduction. I mean, we did see a reduction on last Friday's report. I'm almost sure we're going to see another big chunk of speculators leaving the market on the corn side. And let's just look over the pricing. There's some really interesting pricing movements happening that not exciting from a standpoint of friendly for the farmer, but exciting from a standpoint of seeing global events through grain prices. First thing, that's the bleakest bit of news, and this is honestly what I woke up to and was just kind of my heart sank a little bit, was I really wanted this 200-day moving average. That's where I drew that black line. I really wanted that to hold. Tariff deal went through in the overnight. So far, it isn't holding. The fact that 200-day moving average did not hold, that's the reason that I'm not recommending reowning corn, reowning beans, stepping out of sold positions on corn and taking a profit on it. It's because that level hasn't held. And so where are we falling to? Maybe that's just a fluke overnight trade. We're going to go up and down. Maybe it's going to ping pong and just a V recovery to the upside, and we'll be a week late on jumping into long positions. That might happen, but we also might be looking for some level of a value area. And if we are, where do we get the support? We don't know that, right? But we've traded down to the low fours. So we lost support here. Where is it going to find support? Is it going to be here? Is it going to have to come all the way down in here, all the way down in here? We don't know. And again, same basic idea as the beans. I don't want to catch a falling knife. So we're not going to step into reownership. But I do want to just analyze the corn market a little bit because I think there are some fascinating takeaways. And let me move this over. All right, so that's July corn. What I just showed you is July corn, Chicago Board of Trade. This is July corn from the Brazilian exchange. July corn from the Brazilian exchange. And just to throw a wrench in the gears, Brazil is actually out for Carnival. So markets, some markets are closed, some markets are just low trade volume. But so Carnival goes until noon tomorrow on Wednesday, and then markets will open up. So we'll really only get an opinion of how the Brazilian exchange is dealing with this news on Thursday, which is kind of bizarre because, we have end of last week, the outlook, then Tariff Tuesday today, and the second largest producer is largest producer of soybeans, but I think it's the second largest exporter competing with the U.S. on corn exports for 1 and 2. They're like, yep, we're going to have Carnival here. We'll talk about the markets later. So the timing of that is a little bit interesting. So we're in this pause where the Brazilian market hasn't really made a move, but the U.S. market has. And this gives us an interesting outlook. I'm going to scroll between these two contracts because I don't want you to get caught up on the price level. I'll talk about the price level in just a minute, but I want you to see the image and what happened in the corn market. The corn markets were looking very similar. You had that trade up, and then Chicago Board of Trade corn just absolutely plummeted, right? Just absolutely got destroyed over the last 10 sessions. And that has not yet happened in the Brazilian exchange. So, corn markets are kind of, up a little bit, and then Chicago Board of Trade gets destroyed, and the Brazilian corn is still up here. What gives? And now we're going to talk about numbers. So this 73.50 that you see in green, let me get the marker pulled up here and get that black just so I can mark it up a little bit. Let's see. Get an arrow there. Okay, there we go. 73.50, that's Brazilian currency per 60 kilogram sack. I'll save you the trouble, but just for rounded numbers, that comes to about $5.65 per bushel. That 73.50 comes to about $5.65 per bushel. And then now from the beginning of the video, remember I talked about the tariff deal, 15% retaliatory tariffs from China on U.S. corn. So if China is not going to buy corn from the U.S., or if there's going to be a tariff, where are they going to go? Well, very likely the second largest exporter of corn and their big old trading buddy, Brazil, they're going to go to Brazil for corn. So what would you expect the difference between those markets to be? Ballpark, 15%, right? Give and take local supply and demand, exchange rate risk, all that stuff. But you would expect there to be a wedge of about 15% between those two markets. And that has happened. Basically, what I'm going to defend is if you would take 15% out of the Brazilian price of corn for the July contract, that would be about 480. So, 565 minus 15%, we're looking at about 480 is what that market should be trading at, the July corn. Well, we both know that July corn in the U.S. is way below 480. So what's going to happen when Carnival is over and this market comes back to trade? I think very likely what will happen is we will see the price of corn in Brazil either drop, or we'll see our corn here in the U.S. turn a corner. Now, there is another very significant difference, in my opinion, about this situation in relation to 2018. First point, I don't know how long-lived these tariffs will be. That's one point. Second point, the ability that Brazil had to expand soybean production in kind of a short term to meet the Chinese demand. Brazil is not nearly as reliable of a corn provider as they are as a soybean provider. So I still think the U.S. has a little more leverage when it comes to corn. And again, Mexico has been a major buyer of U.S. corn. And as of now, or as of, when I started recording this, there is not a retaliatory tariff from Mexico. So I still think our corn market, I don't think it's going to be quite as dramatic as what it was in the soybeans, or maybe it already has been. We really saw this corn market get punished. The question now, huge correction to the downside, Tariff Tuesday, will it stay down here, and will this corn market stay pressured long term, or is this a seasonal drop coming into a V recovery coming into the spring? And let's look at the December corn. December corn, similar story. We lost the support here, and that's very bad news, and it's trading heavy. And again, not going to recommend stepping into any type of reownership at this point in the corn market. I would say, and this is a great example to just kind of look over, just to kind of understand how markets, right? Made a recommendation to sell here, and then made a recommendation to sell here. In hindsight, I wish I had recommended a sale here so that there was an average sale price during this move. That being said, it's very hard when you have a trending market to get that last tip of the move. That last tip of the move here or here or here. That last tip is very hard to capture because basically it's going up and you just have to guess when it's going to stop going up. Same thing with what we have right now. Maybe we're going to come into next week and realize, oh, that 200-day, this corn market turned, and what we're seeing right now in real time, this actually is the tip of the move. We should actually be buying this, we should absolutely be stepping into reownership. Maybe that's the case, but in real time, it's very hard because you don't know where that market turns. So it's a lot easier to get markets right if you kind of wait for the turn and then jump in, but that means you miss kind of the tips of those moves. But every now and then we'll get one right. We'll hit a home run. We'll say, man, that was right on the dot. But this is a classic example, right? It would be great if we knew markets were going to turn around. This is where we should be stepping in. We don't know that yet. And the comment that I wanted to make on the corn market is seasonally, similar to what happened with the soybeans. Seasonally, what we would expect to see at this time would be a correction of the downside followed by a spring rally. It never ceases to amaze me how, in my opinion, seasonals almost always trump headlines. Now, there's exceptions, and I'm sure you can think of exceptions. For example, 2020, seasonals did not trump headlines. I'm trying to think if there's another one. But generally speaking, the seasonal uncertainty of raising a crop is usually a bigger story than whatever headline is going on. Even if you go back to 2018, there was escalating tariffs and all that. But when the tariffs actually hit, and the soybean price actually plummeted, it was actually a seasonal time as well, which made it all the harder to get up off the rope. So, and I don't know if that's part of the considerations, right? With Tariff Tuesday coming in early March or late February instead of, May. But I'm still somewhat optimistic. I feel like getting corn up over $5 in the winter was a warning shot. I think there's a lot of people that are saying, I saw $5, I'm not selling corn unless I get $5. So I don't care what the tariffs are. I don't care what the situation is. There's corn in my bin. You want it. You give me $5 and we can talk. And I think that there's enough corn in the U.S. in the hands of farmers who have seen those prices and are saying, give me a spring dollar, $5 plus price in the spring and you can have my corn, to where I think this will be a V recovery. But is it a V recovery from the current price level, or do we drop another 20, 30 cents? I'm not sure. So that's why we're not going to step in front of it. Let's go to a summary. Seasonal. It's March. It's time to start selling corn, seasonally speaking. The managed money position as of last week was actually still big enough to also sell corn. Corn is in a downtrend. We kind of sold, we recommended extending new crop sales before that big sell-off. So we're not sellers at this time, but that's the situation. Soybeans are technically neutral on the seasonals. They are also neutral on the position of the funds, and they are also in a downtrend. Let's get this, there we go. Soybean basis levels are below historic levels in most regions. corn basis levels are tracking with historic levels in some regions, but below historic levels in most. The corn and soybean markets are both in downtrends after having failed to hold critical support levels. All right, and then to wrap it up, just a few questions, and that's what we got. And I think I've actually answered some, but question number one, will corn prices recover? My bias is yes. My bias is this is a seasonal drop. Yes, there's a tariff story, but coming into the U.S. spring, and it's not only spring in the U.S., right? Most of the global corn is produced in the Northern Hemisphere. So China, Ukraine, and then by far the U.S. is just head and shoulders above everybody on corn production. So the weather risk of the U.S. spring or the Northern Hemisphere spring, that is the biggest potentially bullish story for corn year in and year out. We're just now getting into that with safrinha corn risk. So, and even 75% of Brazil's double crop corn has weather risk at roughly the same time. So between now and whenever we're out of the woods on weather risk in the U.S., we are entering the period where global corn supply is the most vulnerable. And my bias is what happens most years will happen again this year, where at some point in time, there will be enough uncertainty about corn supply to make corn prices rebound. That's what I think will happen. Now, are they going to rebound from this price level? Are they going to drop another 20, 30, 40 cents and then rebound? I don't know. But yeah, I do expect a spring recovery on corn prices. Again, if we're placing wagers, that is the most probable thing to happen based on what happens historically. Question number two, again, I think this has been answered. Why did corn market fall so hard? Well, it's a combination of, everything that goes up comes down. So I think we're kind of due for a correction to the downside. It was such a big correction. We got a not a friendly outlook, expecting 4% increase to U.S. corn acres. That's not friendly. And we also got the Tariff Tuesday coming on, and then a retaliatory tariff from China of 15%. The combination of all that hitting markets over the last week, that is a lot to throw at markets. And yeah, we've seen a major correction to the downside. In my opinion, this fall, this is not, whenever we get a July correction to the downside or an August correction to the downside, that's a market where I'm like, this thing might not come back ever, or not for 6 or 9 months, or in my opinion, the February, a correction to the downside, even if it's dramatic early in the year, this is probably going to rebound, right? That's still my bias. So we'll keep an eye on it. We'll track this week by week. No action recommended for this week. But definitely a lot to follow in the corn market. Try to take deep breaths and not project current corn prices over your livelihood too much. Hopefully we get a recovering market and we can lock in better prices on the remainder of the sales we still have to do, and put some of those profits on hedges on some Q1 and Q2 bushels. To take home some of those profitable hedges. Hope you have a great rest of your day and a great rest of your week.